All right, welcome everybody to our Finance Friday weekly course. I'm Jerry Fetta, owner, founder, CEO of Wealth Dynamics, author of the Blueprint to Financial Freedom. And we're doing this course tonight. We do this course every Friday night. We're doing this course tonight to talk about financial obstacles, okay? And I'm sure we all have had them before. And I want to go over, what they are, how they're handled and also how they're prevented, because the whole goal here is building financial independence and creating wealth, and it's harder to do that when we have more obstacles. And I used to be in a position in my life where it seemed like that's all I had with my finances. It was one thing after the other. There was always some weird circumstance or accident or thing that was preventing me from getting where I wanted to be at financially. So we'll address that tonight during this course. A couple of things I like to go over before we get started. So number one is make sure you've got a reason for being here. If you don't have a purpose for watching, for tuning in tonight, it's going to be very hard to learn much of anything. So have that purpose. Make sure you've got that top of mind. Second thing is I want you to get rid of the idea that money is hard and you can't understand it. Okay, that's a myth. Money is basic math. So if you're smart enough to add, subtract, multiply, divide, then you're smart enough to figure out finances. If you know how to use a dictionary, you can look up the terms related to the finances and figure that out as well. So as long as you can do basic math and use a dictionary, you can learn anything you want to learn about money. Okay, people don't tell us that because they don't want us to know that. Banks, Wall Street, they have a vested interest in finances being hard. The harder, the more complicated it is, the more we feel like we need them, the more money they make in fees and commissions. That's how that game works. Right. So I'm here to tell you, I grew up, without that. I didn't have a background in finances. I learned all of this the old school way. Right. And you can do the same thing. Okay. So get rid of the idea that money's hard. Second thing is get rid of the idea that you know it all. I haven't met too many know-it-alls, but the ones that I have met usually know the least. Right. The fixed point of I know everything there is to know, there's nothing left to learn. That's where people start losing in life. That's where you start losing. That's where you start going downhill. Right. My dad has this phrase. I've used this several times just this week, is if you're going to do dumb stuff, you better be tough. Right. And I think that deciding I know it all is the fixed belief, the fixed idea that I know everything, therefore I don't need to learn more. And I'm going to do dumb stuff when that happens. Right. So I better be tough if that's the case. I don't have to be as tough if I don't do the dumb stuff. Right. So get rid of the idea that you know it all. And then the other thing too is I want you to be a producer as we're watching this. Think about how am I going to use the information? That's the entire reason we learn. It's not to, feel good about getting educated. It's not to show off our merit and our certification or whatever we get from it. It's to use the info. If I'm not going to use the info, why am I learning it? Right. So I want you to think about how can I use this as I learn it tonight. We're talking about financial obstacles, how to handle them, how to prevent them, and make greater progress towards financial freedom. Okay. And then lastly, ask your questions. If you guys have questions, we will go live throughout. I like to go live every 10, 15 minutes. If you're on Zoom, drop them in the chat. We'll go live together there. If you're on Facebook, we'll answer them in the comments. Okay. Now, good to see everybody. Justin says, who is this clean cut guy? Right. I had longer hair and a beard last week when you guys saw me. I don't know what happened. I just woke up like this apparently. But I want to talk tonight about obstacles, right? So this is something that I looked at as the topic this week, and I wanted to cover this week because I think, people, whether they're clients or not clients, obstacles are something we face with finances, right? What would an obstacle be? If I'm on a route towards something, I'm going somewhere. In this case, I'm on a route towards greater financial freedom, or I'm on a route towards financial literacy or solvency or whatever it might be. That's where I'm heading. It's A to B, go from point A to point B, right? And an obstacle would be something that either stops me or it causes me to maybe go off to the side. Instead of going from point A to point B, I go over here instead, right? And what that does is it slows down my progress. The more of these obstacles happen, the slower I end up going with my finances. Right now, for me, like when I was growing up with money as a young adult, I had tons of obstacles. Overdraft fees, broke all the time, car payments that I couldn't afford, paycheck to paycheck, having to borrow money from people, getting into debt, all of these things. And so for me, the beginning stage, and this is where a lot of people start, if you're watching and you're new to this, that might seem normal, right? That might actually seem like reality. Like, yeah, like my life at that time when I was 18, 19 years old, it was overdraft fees. It was being paycheck to paycheck. It was having tons of debt. And I thought that was normal. So to me, that wasn't an obstacle. It was like, oh, isn't that how you do money? Isn't that how everyone does it? Right. And I didn't realize that that's not how you do money. That's not how everyone does it. And so I had to look and realize that I was actually, like the number one obstacle is making the obstacle your pet, agreeing with the obstacle. Like me saying this is normal, this is reality, right? And it's not, because there's other people in the world. There are other people in the world that don't have that same problem, right? So I've got to look at this and I have to be able to identify, okay, that's an obstacle. It's not reality. It's not the thing that I should expect as normal. I shouldn't justify its existence. I should actually overcome it. Right? It's like, it's a challenge, right? If I'm on an obstacle course, the point of an obstacle course wouldn't be to quit in the middle. The point is you overcome the obstacles and get to the end of the course. Right? We used to have, when I was in school, they'd bring the military, the National Guard. They bring this giant obstacle course to the school. I remember being in, 9th, 10th grade going through that. And it was fun because it was a game. Right? It was trying to get from point A to point B, just like I described, but I could predict. I'm like, okay, that one's a ladder. That's a rope. And I knew that I had to climb those things. I had to hop over those things, and it made it a game for me. And so with finances, the first point to realize with obstacles on why they become difficult is, number one, it's no longer a game. And number two, we don't predict them. Right? When something is predictable, it's not stressful. We know what's going to happen. Like if I tell you, hey, it's going to rain tomorrow, bring an umbrella, and you bring an umbrella, you're not stressed out about the rain because you're going to ruin your clothes. You're not worried about that. You brought the umbrella, you predicted the weather. Right? Same thing goes with obstacles. When I know there's going to be an obstacle, I shouldn't be surprised when it comes up. And then it's not as stressful. It doesn't derail me as bad. The second thing is it has to be a game. Right now, a game, that's a mindset. With finances, a game is a mindset. I decide that I'm playing instead of being very serious and solemn all the time. Right? And so it's hard sometimes to do that with money because we're not winning. Anyone that plays the game wants to win. Right? Those that constantly don't win, the game becomes less and less fun to play. Right? And we don't enjoy it as much, and we drone on and on and on and on. And so we have to have the mindset, the attitude that this is a game and it's winnable. It's a winnable game. Finances are a winnable game. I want to stress that. There's this idea that it's not, because there's not enough money and all the old rich white people took it all and all this other stuff. Anyone can go build wealth. You can go show me any gender, country, skin color, race, whatever, and I can show you somebody in that spot that has built wealth, because it's math. At the end of the day, it's math, and it's a winnable game. It's a solvable equation, right? So I want to point this out. There's a difference between an obstacle and there's a difference between just putting in the work, right? And I want to start here, because if I can separate those out, I want to make sure that we understand that building financial freedom, we're going through and doing this blueprint to financial freedom. This is not Skittles, rainbows, and unicorns. This does take work. It does take sacrifice. It does take, an amount of time and investment of, time, money, effort, energy to get financial freedom. The question is do I think that that's a worthwhile endeavor? And if I do, I'm going to put in the work, and I'm not going to complain about the work that I decided to do. Right now, if I'm not sure of that, or I'm wafting, I'm going to look at the work that's required, and I'm going to see the work as the obstacle. And I'm going to complain about the very thing that I need to do in order to achieve the outcome. Right? It would be the equivalent of this. It would be the equivalent of, I start going to the gym. I'm like, hey, I'm going to build muscle. Right? And I look at that. I'm like, okay, well, that requires that I go to the gym and I'm going to eat more protein and all this other stuff. But then I forget that that's the thing I have to do to achieve my outcome. And I start complaining about going to the gym. And I start complaining about eating more protein. I start complaining about getting enough rest. Okay, well, I'm not going to achieve that goal. Right? Because the thing I'm complaining about is the thing that's required in order to get the outcome that I want. And so I can't have this counter intention saying, okay, well, here's the step I need to follow. Here's the pathway. Here's the route. Let me complain about it the whole time as I'm doing it. I'm not going to get there. This isn't, like you have someone driving you and you're the child in the back seat complaining that it's taking too long. And are we there yet? You're the one driving. So if it's going too slow, your foot needs to go on the gas pedal more, but you're not going to do that if you're complaining about the work that it takes to push down. You see? So the work is not the obstacle. What would an obstacle be? I want to give you some examples, right? So an obstacle would be, something that actually gets in my way in addition to the work. It's not just part of the process. It's an actual barrier, right? So here are some examples, having substantial consumer debt, that could be an obstacle. right? Like that's something that, it's the average, let's say credit card balance, I think is around 10 or 15 grand. If I've got 50, that's a lot more than what's normal. It's unusual. That's now an obstacle. An obstacle is not the usual thing, right? Having all of my money wrapped up in retirement accounts so that I can't access them, that's an obstacle, right? Because if I want financial independence, it requires that I have passive income, and that financial tool, the retirement account, disallows me to have passive income. That is an obstacle, right? So the average retirement account balance is like 70 grand. If I've got a lot more than that in there, that's unusual in the stance that if my goal is passive income and I've got everything I own in things that don't produce passive income, that's illogical. That's an obstacle for me. I'm going to have to overcome that in order to build wealth, right? Another one, this is one that I see happen a lot, getting into an investment because I'm excited, or FOMO, fear of missing out, or some influencer told me to do it, or someone said it's the greatest thing in the world. So I get into it without having a plan to get out, without having an exit strategy. And then when I sell, I have taxes. And I don't plan for the taxes because I wasn't thinking about that when I got into it. And now I'm like, man, I got to get out of this deal, but I'm going to pay, 100, 200, 300 grand in capital gains. That's an obstacle, right? So these are all things that if I don't solve them, what happens? They either slow me down or they stop me, right? If I'm running full speed and I see something that makes me uncertain, I'm going to stop. Right. So the tax thing, I'm gunning it towards financial independence. And I see if I sell this asset and I get into a better deal that produces passive income, but it's going to cost me $200,000 in taxes. Right. I should have planned that before I got into the investment. It's common knowledge that when you buy something and sell it at a profit, there's going to be taxes. Why didn't I think about that before I got into it? And so now as I'm approaching doing something that could actually help my progress, I stop, I slow down because I see the obstacle. Right. So that's a big one. Now, the main obstacle, and you might want to write this down, the main obstacle that precedes all obstacles, and Mark hit it on the head already, is lack of knowledge. When I don't know things, I become uncertain. Right. So the tax idea, like if I'm doing the investment and I didn't know about the taxes, what's the common thing there? I didn't know. I missed information. I didn't have the knowledge, and therefore my lack of knowledge caused me to slow down. Right. Same thing with debt. Let's say that I get in debt and I didn't, just like the investment, I didn't have a plan to get out of it. I didn't have an exit strategy. And so now I've got all of this debt and I'm unfamiliar with it. I don't know what to do. I lack knowledge. That is the primary obstacle. That's the primary barrier there. I use the example of having all my money, locked up in retirement accounts with Wall Street. I didn't know better. I didn't know that that's not a good idea. I didn't know that there was alternatives. I didn't know that I could be using the sacred account or using a self-directed retirement plan. And so again, my lack of knowledge results in me slowing down. Whether that's because I can't move, like in a retirement account, I can't pull that out of there, or because I'm uncertain of what to do. Right. So two things is, like I said, lack of knowledge, and then getting involved in things without thinking about the exit. These are two of the primary components of any obstacles. I have lack of knowledge that causes me to make a bad decision or slow down or have uncertainty. And then stemming from that lack of knowledge, I make a choice to get into something without thinking about, can I get out? Right? What is my plan to get out? Like, and that's part of it. Again, if you're in debt, like you got in, you didn't think about how you're going to get out. If you have an investment, you've got substantial taxable capital gains. You got in, you didn't think about how to get out. All your money is locked up in your 401k. You got in, you didn't think about how you were going to get out. Okay, you will see very quickly with banks in Wall Street and the IRS, it's really easy to give them money. It's really hard to get your money back. Right? They want it to be simple. When you send the money into the 401k, what does it do? It's right off the top of your paycheck. You don't even have to think about it. You don't even have to give them permission every time. You just say, yep, once, good, right? And that's it. But then when you're like, hey, I want that out, I want to use that, I want passive income, you're like, sorry, this is ours till you're 60. And even when you're 60, you're going to pay taxes when you pull it out. Again, obstacle. Right? So the first thing we've got to do is we've got to look at those aspects. Realize that the obstacle is there because of us. This is a tough one to confront. Justin says, would you call inflation and the economy an obstacle? Are obstacles things we can personally control? Good question. So Justin's saying inflation and the economy. So again, if something's predictable, it's not an obstacle, right? Like it's just part of the work. It's part of the price that I pay to to do the thing. It's part of the investment. Inflation, it's been happening every year for over 100 years in this country. Right? I don't think you can get more predictable than that unless you're a sacred account or your gold and your 6,000 year track record or 150 year track record. Inflation has a very long track record. We already know it's going to happen. Right? So someone that looks at inflation and they're like, this threw me off my game. I wasn't expecting it. A, they're either financially illiterate, like they literally didn't know about inflation and that's a new thing to them, like very, very financially illiterate. Or B, it's not actually an obstacle. They're complaining about the work. Part of the game of building wealth is as you earn the income, it goes down in value. You can't buy as much with the currency. Okay. The solution, I tell you guys, get the income, trade it for a store of value, and then put that into income producing assets so that it supplements the income again. And you keep doing that. That's our triangle of wealth. Right. So if I'm complaining about the fact that it goes down, it's like, well, kind of like the gym thing. Well, yeah, you're going to have to lift weights to build muscle. Yeah. You're going to have to put up with inflation as you earn a currency that's got no value. That's just part of the game, right? Same thing with the economy, up and down, up and down, up and down. It's always done that. So, if I'm surprised by the market crashing, if I'm surprised by, the economy changing or shifting, again, either I'm very financially illiterate and I have never looked at a graph to see what do these things actually do throughout history, or I'm complaining about the work again. Right. So, and then Justin's second part of his question was, are obstacles only things we can personally control? I would say so. And I'm not saying that, that's not an obstacle because I can't control it. I'm saying that I actually am responsible for the obstacles being there. And this was going to be my next point. If I have an obstacle, I put it there. It's personal finances. It's not their finance. It's my finances. Right. So what are my obstacles? Let's say that I live paycheck to paycheck. I did that. I caused that 100%. So sure, I can control the outcome. But before that, with any obstacle, with any barrier, I need to realize that I actually controlled the reason why it's there. Right. I'm the one that in the paycheck to paycheck scenario, I'm the one that's not producing enough income. Right. I created that obstacle. With the retirement account example, I'm the one that put the money in there. Okay, I created that obstacle too, right? The tax thing, like I'm the one that created the tax problem. I'm the one that got into the investment and didn't realize, oh yeah, I'm going to sell this at some point. I wonder what's going to happen when that occurs. Should I plan ahead? Right? So every obstacle is self-created. It's not going to be the government's fault. It's not going to be the Federal Reserve Bank's fault, even though we love to pick on them. It's not going to be anyone's fault but my own. Right. And so as I'm going through and I'm seeing these obstacles, I have to realize before I can handle any obstacle out there, before I can handle it, I have to realize I am the reason that it's there. I created it. I have to take responsibility for it, which means I get rid of any other causative factor. Like I can't blame it on anyone because as soon as I do, I give up responsibility. It's now their fault. Right. Well, if it's their fault, I can't fix it. If it's their thing, it's their thing. It's not my thing. Right. And some of this is almost, I'm going to go ahead and say that it's almost illusion. You have to give yourself the illusion because you'll see actualities of like, oh yeah, maybe it was some of their fault. Maybe it was. And even if it's valid, as soon as you do that, you gave up control. So I have to actually have the illusion. No, it's my fault. Because if it's my fault, I can control it. If it's not mine, I can't control it. I want control. Therefore, I'm going to make it my responsibility. Then I can handle the obstacle. Right. So let's pick one. Let's pick one of the ones we've been talking about. Let's say that, I have, let's use the retirement one. I have all of my money locked up in retirement accounts. I just found out that I could self-direct. I've just found out that I can't pull my money out of a retirement account to self-direct because I still work there. And now I'm like, man, this sucks. I've got $400,000. If I could access that, that would be $4 or $5 grand a month in passive income. I'd be halfway to financial independence right now. But instead, I've got to wait till I'm 60 or 70. Right. So here's how I would walk through this. The first thing I would do is I'd look at it and I'd say, okay, is that part of the work? Right. Or is that the obstacle? And I'd realize that that's an obstacle. It's not part of the work. Right. It's not common for me to have all of my money locked up, even though for most people it would be common. Right. But you have to realize who most people are. Most people, quote unquote, are consumers. Most people are Homer Simpson with their money. Right. But if you study the wealthy, they're not most people. If you go talk to the top 1%, they don't have their money locked up in retirement accounts. That's uncommon for them. That's unusual. Right. So I have to look at my viewpoints on this. What's usual is based on what I'm trying to accomplish and who's in that group. I can't say, hey, I'm trying to build top 1% wealth and then compare all of my financial decisions with the middle class and the bottom 90%. Nothing against that, nothing against those people in that group. But I'm saying if I'm trying to get here, I can't compare my decisions with the people that aren't there. I have to compare my decisions with the people that are there. And if they ain't doing the stuff I'm doing, right, I shouldn't be surprised when I'm not getting the results they're getting. When they're not maxing out their 401k plan, they're not giving their money to Wall Street, they're not working with a financial advisor. All of the things we're told to do are things the wealthy don't actually do. Right? So my lack of knowledge is the obstacle there. Do you see that? So when I don't know that, and then I say, okay, well, I want to be wealthy, I want financial freedom, I want to control my life and my decisions and have options, but I'm going to go do stuff like my neighbors do, and my family members do, and my coworkers do, and my mom and dad do, and my pastor, and all these people in my life that are my peers, but they're not wealthy. That lack of knowledge is the obstacle. And so I'd have to look at that and realize, okay, my knowledge is the first obstacle. Right. And so because of that, I got involved, like I said, in something that I can't get out of. Right. You'll see that as a commonality with most obstacles. It's almost always going to be entering something you can't get out of. Like imagine going into, a restaurant, really good restaurant, 5-star, Michelin star, great food, all of this stuff, but there's no exit. Right. You go in there, and once you go in, you can't come out. Doesn't matter how good the food is, you're probably not going to go in that restaurant. Right. And so with finances, it's the same thing, except most of the time the food didn't even look that good. You just did it because someone said, hey, that's what you're supposed to do. Right. You're supposed to put money in the 401k. So you did. It wasn't even like you knew about the 401k and you had it wasn't like you were financially salivating over it and you're like, this is the greatest thing in the world. I can't wait to put money in there. No. The boring HR rep told you check this box. So you did. And now all of your money is in there and it can't come out. Right. Same thing with debt. Let's say you charged up your credit cards. It wasn't like you were enticed to do it. Like it's not like you were a kid and you were like, man, when I grow up, I want to be in debt. No, that wasn't it at all. It's not like you were going to be a fireman. Right. Like you didn't have that. So when you got in debt, it literally was just, you didn't care. You're like, yeah, I'm going to borrow the money. I'll pay it back later. I don't have it right now. I'll figure it out. And it wasn't even that great. And you probably, don't even remember what you spent it on. Right. Unless it's a car or a house. But if it was credit cards, it's like, you probably ate it. You probably, sold it at a garage sale 5 years ago. You don't have the thing anymore, yet you can't get out. Right. Same thing with the investments, guys. Getting into investments that we can't get out of, or that incur giant capital gains that we don't plan for. A rate of return is a commodity. What do I mean by that? You can get a rate of return anywhere. You can go to any investment and say, hey, I want to make a rate of return. And they're like, great, we can sell you that. It doesn't matter what it is. They're going to tell you they can make you a rate of return, right? Everything other than the rate of return is what matters. How liquid is it? Is it taxable? How do I get out? Can I borrow against it? What's the intrinsic value? These are all things that other than the rate of return matter more, because everything is going to have some kind of rate of return. You see what I mean? So that's homeostasis. That's a level playing field. Nothing's different there. The difference is all the other details. So if I'm getting involved in investing and I don't know those things, then yeah, I'm creating an obstacle there, and I'm not going to be able to get out of the investment, and I'm not going to have, the tax planning and all that set up. Right. So these are all things I have to consider. Now, the other factor that I want to point out with an obstacle, like I said, finances are math, right? 100% just strictly math. There's no other aspect to finance, just math. Like you add this, you multiply that, you divide that, you subtract that. That really is what it comes down to. So with math, like a math problem, we did this in school. They're called problems, right? An obstacle, you could call that a problem. A problem always solves when you have the right information. When you put the right numbers in, the problem always equates, it always solves. So with finances, if I have an obstacle that won't go away, I've had it for a while, I've been focusing on it a while, I have my attention on it, and it's still there, it means that there's a lie in it. There's misinformation somewhere in that area. Right. And again, it goes back to the math. If I said, 2 plus what equals 4, and you had the right number, you'd say 2 and it would solve. Your calculator would solve that equation. But if you're putting the wrong numbers, it's not going to equal 4. Right. So no different. If I have an obstacle and it's staying, I have debt and I can't get rid of it. Right. Not only is there lack of knowledge, not only did I get into something that I can't exit, but there's actually wrong information in there somewhere that's causing me to act in a way that recreates the problem. You see what I mean? So when I look at this and I'm like, okay, so, I have, this issue, where's the lie? And this goes back to financial illiteracy. There's two types of financial illiteracy. There's financial illiteracy, meaning I don't know something, like I don't have the information. It's new to me entirely. I'm not familiar with it. And then there's financial illiteracy in the form of I have the wrong information. Like I have info and it's not correct. Right. And so I'm using it and it's causing a worse situation. It's creating obstacles because it's not correct. Right. At least when I don't have information at all, like I'm oblivious to it. And there's not like I'm doing something and continually causing it. It's more like a happy accident. When I have the wrong information, I'm continually causing it. And I probably also have an emotional attachment that's making me think I'm right because of the significance of who told me the information or where I learned it from, or, whatever it might be. Right? These are fixed ideas. When I have a fixed idea, it means that I believe something and I haven't inspected the idea. I haven't inspected the source. I haven't inspected, does it work? I haven't inspected, what are the results of the people that are using it? Right. So anytime there's an obstacle, that's what I look at. For me, like early on in life, when I was, starting to do this money thing and I had all these problems, I had a lot of lies about finances. A lot of things that I thought were true, things I learned in church, things I watched my friends and family do, things I observed. And I just came to the conclusion of that must be how you do money. Right? Like my parents were not great with money. So I would look at their behavior and I was like I said at the beginning, this is normal. This is what occurs with finances. And so I then brought those into my calculator as solvable equations. I'm going to use this every time now because that's what I think is right. And what would happen is I'd use them and it'd create more problems. Right. And I didn't realize it would create more problems. And I look around and be like, what the hell? Why are there so many problems and more obstacles? What's going on? And it wasn't until I realized that the information I had wasn't true. There were lies in the equation. There were the wrong numbers being entered. They were creating the wrong equation, the wrong solution. And so it wasn't giving me what I wanted. I had to be able to abandon that information and say, this is not correct based on result, not based on my emotional attachment. Based on result, this is not correct. I'm going to get rid of it. No strings attached. And I'm going to go get the right info. Right. So, and I'm going to open this up for questions in a second. Getting the right info is also work. Right. So realize there's no woe is me here. Right. Like creating financial independence is not get rich quick. It's not get rich easy. You can't just buy a digital token and hope it goes up, 4 or 5x and you're done. You actually have to earn income and save it and invest it and earn it and save it and invest it over and over and over and over and over until you've achieved passive income greater than savings, expenses, and taxes. That might take you 5 years. It might take you 10 years. It might take you 20, but it's going to be work. Right. And like I said before, it's not work we complain about. If it's my decision, that's just what I've got to do. It comes with the territory. Right. Like one of my personal policies is I never complain about a decision I've made. On my own determinism, if I decide on something, I'm not going to then go complain about the thing I just decided on. If I don't like it, I'll undecide it. I can decide on something different. Right. But if I'm saying I want to build financial independence and that's my decision, I'm not going to then complain about, this is so much work. Why is it taking so long? It's gonna. Right. But it's not even taking so long because compared to never, that's pretty short. Most people are never going to be financially independent. 10 years is not that bad compared to never. Right. Even if you do the traditional method and you do it by 60, for me, guys, that's 30 years away. 30 years. 10 years is not that bad compared to 30. I would rather do it in a third of the time, even if it's more work for that 10 years. Right. So that's the first level of work. But the second level of work is the obstacle itself. Overcoming the obstacle is going to be additional work. I'm going to do the work to become financially independent. That's a given. But if I have a bunch of obstacles, I'm going to do the work to overcome the obstacles as well, in addition to becoming financially independent. If I've got 6 figures in consumer debt, that is an obstacle. And I will have to go do that work to get rid of that before I can even make forward progress. Right. If I'm like, man, I'm a net worth millionaire, but it's all in a 401k plan that I can't use till I'm 60. Right. And I want to be financially independent in 10 years. Guess what? It doesn't really matter that I have $1 million net worth. It might as well be 0 because I can't use any of that. So I need to go overcome the obstacle of either getting that money out somehow or recreating the million so that I can start to make forward progress. You see what I mean? So an obstacle is always going to have 2 layers of work, the work related to just overcoming the obstacle itself. And then the work related to, okay, well, now that I've overcome it, I'm back on track with the blueprint. Now I'm doing the work just to build financial independence, not handle the obstacle. Right. So let me open this up really quick for some questions. I see some in the chat. If you guys are on Zoom, drop your questions in the chat feature. I'll answer those live. If you're on Facebook, I will read them off the old school way. Awesome. Good to see everybody. By the way, we've got Mike on tonight. If Mike reaches out to you, so Mike is another form of nano. So Mike works with me. He's on our sales team. If he's connecting with you in the DMs, it's going to be for one of two reasons. Number one, he wants to connect with you for a call. And that's free. You don't have to pay for that. You just get a consultation with Mike, with Nano. The second reason would be if you are new and you don't have a copy yet of Blueprint to Financial Freedom. You're not going to learn everything you need to know on this webinar. So if you're watching this and you're like, hey, this guy seems genuine, he seems helpful, then get the book, reach out to Mike. You can also go to jerryfetta.com/B2F and you can get that set up there as well. But be sure to check your messages and comments with Mike here. All right, good. So I don't see any other questions on Facebook. Let me jump on Zoom with some questions here. All right, we have a question from Mark. Let me bring Mark on live here tonight. All right, we should have Mark here. Mark, I gave you the microphone. You should be able to unmute. There's Mark. How are you tonight, Mark?
Hey, Jerry. I'm kind of on my phone, so it's hard for me to talk. I'll make it quick. Yeah,
that's okay.
What's a good example of? Gee, I forgot my question. What's a good example of a investment that is hard to get out of, or impossible to get out of?
Yeah, that's a great question. So a good example, one that comes to mind, Mark, would be a non-traded REIT, a non-traded real estate investment trust. And this would be in, owning a trust that buys real estate. Because it's non-traded, you can't sell it to anyone else. So you're at the mercy of the fund to distribute your principal back or to let you exit the deal. So that would be a good example. Anything that's not publicly traded, or even not even publicly traded, doesn't have to be a stock. Real estate, you could trade that with someone, you can sell that. Anything that's not public like that or is restricted is very hard to get out of. Right. So that would be one. Retirement accounts are another one that are very hard to get out of. It doesn't matter what the underlying asset, once it's in, especially if it's employer sponsored, it's hard to get that, particularly if you're getting a match. A lot of employers have a vesting clause. So you put your money in to get the match, but if you don't stay for 3 or 4 or 5 years, you might never get that match, even if you do terminate and cash the plan out. Right. So those are just a couple of examples. The other ones are more illiquid, and they're not impossible to get out of. But one thing I see happen a lot with people that invest in like traditional real estate, even though they can sell, there's so much uncertainty with tax planning and all of this stuff where they just don't. Right. There's the PITA factor, the pain in the ass factor on selling is so high that it might as well be illiquid for certain investors. And again, that comes from lack of knowledge. Doesn't mean you can't sell real estate, but a new investor or an inexperienced investor that gets into it because they saw a YouTube video and then they ride the wave up, and now all of a sudden it's like they sell, but they don't realize that they have, $1 million gain and they're going to pay $250,000 in capital gains that they didn't plan for. That can cause them to stay in that asset and not sell. And at that point, to the degree they don't get rid of it, it kind of is illiquid. So good question there from Mark. All right, we have a question from Martin. Let me bring Martin on live here. All right, Martin, how are you tonight?
How's it going, man?
Good to talk to you. What is your question?
Yeah, so I've been working with Nano and also with with Rod, and we've been working on my blueprint, and I'm still on phase 0, and it seems to be like we're trying to figure out everything, and everything has been working really, really well. But as of so far, I've been struggling to, work on my income. And that seems to be like the root cause of all my problems. Like if I just almost like, put the puzzle together, I know I could like, go, much faster. So that's kind of like my problem. And, at my workplace, I'm trying to, trying different strategies as well, just to work on that. But, I'm just struggling. That's what I would say with that.
Yeah, that's a good point. And that can be an obstacle. And again, these are all created, right? So one of mine early on, Martin, was actually earning income. And there were several things I can point to and be like, that was a contributing factor, right? Like I grew up in a household where our household income for 5 people was 30 grand, right? We were food stamps and all that. So I didn't know what income was because we didn't have a lot of it. It wasn't like I had this, like when you live in that condition, it becomes normal and you start to reduce yourself to that level. So the idea of going out and earning $100,000 or $200,000 wasn't only like unrealistic to me, it wasn't even on my radar. Like I didn't have the idea that that could even be a possibility for me. Right. So that was part of it. Is I had to start, in order to handle that obstacle, part of the work I had to do is I had to start changing my thinking on what was possible. And a lot of that was, either observing what was possible, like spending time with other people that were earning high incomes and not spending time with people that weren't. Right. And as controversial as that might sound, you got to spend time with the people you want to be like. Right. So if I'm trying to make 200 grand, I can't keep spending time with my $20,000 a year friends. I've got to level my circle up. The other factor too was, sometimes it meant I had to get uncomfortable. Right. I had to spend maybe a little more money than I was used to at times, in order to decondition myself that I couldn't, because I was used to not having money. So the idea that I would go to a restaurant and buy the $50 steak dinner, totally, again, out of my universe. I was like, you never buy the steak, right? We like when I went to restaurants as a kid, you didn't even look at that part of the menu. It was there, but it was like it didn't exist, right? You look at the chickens and the cheap stuff, right? So like part of, for me, it was actually purposefully doing some of that stuff to break myself out of my comfort zone. And it scared me a little bit, right? So that was part. Now, the other part for me, and I'll maybe say 2 or 3 more pieces of this. The other part for me was getting uncomfortable, having hard conversations with people, right? Like to get money, you have to have knowledge, value, and then exchange with other people. I had knowledge, right? I had potential value, but I wasn't using it because I was keeping it to myself. I wasn't going out and talking to people and extroverting and connecting with others. And then I wasn't exchanging. Right. Exchanging is an act. Like I have one thing, they have another. I give them my thing and take their thing. And that doesn't have to be an interaction of coercion or dishonesty. Like you can do that through abundance and actually have a good experience with it. But I was a yes man. I was a people pleaser. I was uncomfortable asking for a sale. I was uncomfortable telling someone I wanted to earn more money. I was uncomfortable with all of those things. So until I was willing to go out and be uncomfortable and have those conversations and do those things, it wasn't until then that I started earning more income, right? So that was a factor. And then, part of that is, again, just putting in the work, right? Like I, as a young adult, I was like, as a kid, here's how my adulthood's going to go. I'm going to enjoy my time. I didn't realize that if I want to be successful in my 20s and 30s, I need to be working 60, 70, 80 hours a week. Netflix is not going to be a thing. Going out with my buddies is not going to be a thing. Like this is the time where I work, right? And so I had to change that mindset down a little bit as well. And then I would say, finally, things you can study, communication, study how your mind works, study how other people's minds work, study sales and study marketing, right? Those are 4 ancillary things. Now, you do need to have a primary skill. I know yours is mortgages. Study that, become top 1% in that field. There's the old adage that it takes 10 years or 10,000 hours to become a professional at something. Do the 10,000 hours and do it in the next 2 years. Right? Just get so good at mortgages. Like you've done 10 years worth of work in 2 years of experience, and no one's going to know the difference, right? You'll have that competence, and that's going to allow you to become valuable, right? And then the exchange is, okay, well, how do I think? What does their brain work like? How does their brain work? Well, how do you do communication? How do you do sales? How do you do marketing? That gets the exchange part down. And then you just keep going through, get more knowledge, more value, more exchange over and over and over. And that's one, like, and I'm glad Martin brought that up. That's one everybody can improve at. Even my clients that are making $400,000 or $500,000 a year, why aren't you making 5 million? Right? You could, because you need more knowledge, more value, and more exchange. That's all it comes down to. If you're making 30 and you want to make 300, or you're 30 and you want to go to 40, knowledge, value, and exchange. For me, why don't I earn more income? Knowledge, value, and exchange. Right? Now, the beauty of that particular obstacle is it is a residual. When you do it once and it becomes a habit, that's going to pay off for the rest of your life. right? Like if I get the habit ingrained of overcoming the obstacle of earning more income, as long as I keep doing it, my income is going to keep going up every year, right? It's only when I stop doing those things that my income doesn't keep going up every year, right? So that's a great question, Martin. Thank you for asking that one. Let's see what other questions we have on Facebook. Andrew has a question on Facebook. If we're fully vested in our work 401k, what would be the process to get the cash out of that account? Or can we only get it once we leave the employer? Really good question. So these are pretty hard to get to. If you currently work there, you're going to have basically three options. The first one is going to be, it's called a hardship withdrawal. Andrew, you wouldn't qualify for that. That's basically I'm broke and I have a hardship and therefore I'm going to take a distribution. Generally speaking, I think that is taxed and also penalized as an early withdrawal, right? So you'll probably lose your tax bracket, state and federal plus 10%, and it might be half your plan that you get out. Depends on if the math on that's worth it to you or not. The other one is going to be a plan loan. You're not getting your money out. You're just borrowing against it. You could temporarily use it for something else and then pay it back, right? And then finally is if you still work there and you're over the age of 60, you can do something called an in-service rollover, where you can actually, just like you have retired, because that is retirement age, you can roll the 401k over into a self-directed account. And at that point, that's not taxable. There's no penalties there. So other than that, you kind of have to just hang tight. If you're stuck in it, I wouldn't keep contributing. I wouldn't keep putting money into it. I would look at where can I invest. Generally speaking, it's going to be a list of mutual funds. If you ask your HR department or your fund administrator about an open brokerage window, or open brokerage directive, those are going to be the two terms they might use. The open brokerage window basically allows you to expand the list of funds you can invest in. So generally they'll give you like 15 or 20. It's like, if you have Fidelity for your plan sponsor, it's all Fidelity, 10 or 15 of their target date funds. But if you say, hey, I want to do an open brokerage window, then they'll say, okay, cool. Well, here's a list of 100, right? And they're going to be, real estate and gold. They're all mutual funds, but there's more options is the point. So at least then you can kind of make better use of what you have. There is somebody paid to be giving you advice, and usually that person does not do their job. So you could call the administrator and say, hey, I need guidance on where to invest my 401k holdings. And they would have to furnish somebody to help you. They don't, because they're earning a fee and they want to do as little work as they can possible for that fee. I would make them earn it. Good question there. Good. So I think that covers questions here before we jump into the next part of this. Good. So let's talk about like handling these obstacles, right? So any obstacle that I have, let's say that I'm trying to handle it, there will be a specific thing I've got to do for that obstacle in addition to the blueprint phase, right? So if I'm trying to achieve financial freedom, there's going to be the normal things I've got to do, earning and saving and investing and doing all these things, right? But let's say that I have debt, I'm going to have to not only earn more, I'm going to have to save more, I'm going to have to invest more, but I also have to look at, okay, well, if I focus all in on the debt, let's say I take all my discretionary income and I pay off the debt. Sure, I handle the obstacle, but I don't make progress on this, right? Because all the money that I put towards the debt, I can't use that ever again. It's gone now, right? So I have to be able to handle both. So what I want to point out here is for the blueprint, if you're a client, you're going to be really familiar with this. Each level that you go on has different tools, right? You're doing a different thing on each step. And so each of those steps is going to have a different tool. Each of those tools is reserved for that step. Sometimes we might, because you're handling an obstacle, reach into the future, grab one of those tools, and we might help you handle the obstacle quicker with that tool. And that's going to get you out faster so you can make more progress. Now, that doesn't mean that you're on that blueprint step, right? Here's an example. Talking with a client today, right? He's doing a sale of some investment real estate, okay? And he's doing a 1031 exchange, which is where you trade a property that's like kind, and you defer the taxes. And so because, he's trying to accomplish his blueprint, he wants to sell the property and he wants to be able to use some of that cash to use, fund his sacred account and pay off debt and do different things. However, the 1031 exchange rules say that he has to put all of his money from the sale into the new property. He cannot keep any of it or he's going to pay taxes on it. Right. So what we did is we set up a call today and we're looking at a couple of deals that we would usually reserve for an accredited investor. Now, he does have $1 million net worth, but he hasn't done the prior blueprint steps. So ordinarily, I wouldn't be like, hey, let's get you into this deal, because he doesn't have a foundation. But in this one scenario, because we are handling an obstacle, we set up, okay, we're going to reach into the future. We're going to grab this tool. It's going to handle the obstacle for you. You technically have the net worth to do it, even though you don't have the knowledge and the experience and the foundation. We're going to handhold you and walk you through it. That's going to handle the obstacle so that you can keep some of the money, fund your sacred account, pay off your debt, make progress on your blueprint, and still have both. Handle the obstacle and make progress. Right? So that would be an example of, okay, let's work on this, right? The other one would be, I have a client that's got substantial debt, right? And so they're working on paying off their debt. They're using their sacred account. They're increasing their income. Okay. Now, later on in the phases, you start working with a legal team. They represent you for different legal stuff, whether that's estate planning, asset protection, and whatever it might be. Because they have a substantial amount of debt, we're going to reach again into the future, grab the legal team, bring them over to the debt and say, hey, we want you to invalidate the debt. We want you to inspect and see that the lenders are following the rules. If they're not, the debt's uncollectible. Can you guys find that out? Now, it doesn't mean that that client is now skipped all the way to this next blueprint phase. They're still on zero. They still have the debt. They still need to do all the things they need to do, but we're going to use that tool to give them the assistance they need to get them out of the obstacle and progress. Right. And I want to point that out, because if I start doing that as a regular practice, right? Like, okay, I used the accredited deal to get the tax thing taken care of. Now that I've done that, I'm just going to keep doing it. I'm now going to create a new obstacle. Right? Because again, where do obstacles come from? Lack of knowledge. So unless I have studied the accredited deals, unless I have the foundation to do them, unless I'm actually qualified, not only financially speaking, but from an experience standpoint, me jumping into that in the future and doing that as a normal practice is actually going to slow me down, because again, I've created the same problem. How do I get out? What are the tax repercussions? What if the deal doesn't go right? Right? So all of these things are like, situational. I can use it to handle an obstacle, but still I have to not keep creating them. Right? Here's handling obstacles, but how do I have an obstacle-free future? I don't create more of them. Okay, and how do I avoid creating more of them? Number one, I am always investing in my financial education, investing both time and money in gaining more financial education. And that's going to be a constant thing. It's going to be every day for the rest of my life. And that's no different than, okay, well, I want to be physically healthy. I need to eat right every day for the rest of my life. I want to be intelligent. I need to study every day for the rest of my life. I want to have a good marriage. I need to spend time with my spouse every day for the rest of my life. Right? Like some of us, and I don't think it's as many of the older crowd in age. I think it's more the younger people. We look at that and that sounds daunting. It's like every day for the rest of my life. That's a commitment. Well, that's what it takes. Right? Like if you want to be financially independent, this is an everyday thing for the rest of your life. Okay, but do you know what else is an everyday thing for the rest of your life if you don't do this? Financial slavery. Having to trade time for money. Not having options, not being able to help people, not being able to travel the way you want to, not being able to eat organic, not being able to, drive the car you want, put your kids through the school that you want. That's going to be an everyday thing for the rest of your life if you don't do this. So I need to pick which everyday do I want? Which one creates the goals that I want? Right? And as soon as I embrace the work and I say, okay, I'm going to do this every day for the rest of my life, I'm going to increase my knowledge. I not only make progress, but I also reduce the amount of obstacles that come up. The more knowledge I have, the less uncertainty I have, the less bad decisions I make, the less, circumstances I create for myself that aren't going to work out in the future. And I don't have the obstacles anymore. Right. So I have to stop creating them through lack of knowledge. Now, the other one is, doing things out of sequence, doing things that are unusual. Right. Like when I look at unusual, I had someone message me today with the crypto markets. Who here's been following crypto? I think Bitcoin went down down below 30,000. Right. And I had someone message me like, hey, this is terrible. It's so sad. I feel bad for these people. And I let them know, I was like, quite frankly, I don't. I've been telling them for 3-4 years, hey, this is going to happen. There's no value. There's no earning. This thing is based on people buying and selling. If there's more buyers than sellers, the price goes up. There's more sellers than buyers, the price goes down. You better hope that you're on the top, not on the bottom. It's speculation. And all I get back is, antagonism and why I do this and it's this and now until they lose money. Right. And so my point with this is that's an unusual solution. me buying literally a computer code. It's not even a coin. It's not anything. It's literally just computer code. It's got no earnings. It's got no value. It's got no use. And I'm buying that. Why? Because I don't earn enough income. I'm trying to shortcut the triangle of wealth. Because I don't earn enough income, I'm going to go all in on a speculation, hope it skyrockets in price so that I can sell it and win the financial lottery. That's an unusual solution. And there's different definitions of unusual, guys. There's unusual, like it's weird. Like if somebody has a third eyeball, that's strange. It's unusual, right? But there's also unusual, meaning it's not the usual thing. Like a very small percentage of people would do that, right? So like drinking coffee with a cup is very usual. Drinking it out of my hands would be very unusual. Unusual circumstances come up in the lack of knowledge. When I don't know something and I create an unusual solution, it leads to an unusual result, right? An unusual result is an obstacle. It's going to be a barrier for me. I now have this weird thing, right? And I've got to put up with this thing or get rid of this thing because I used an unusual solution, right? So an unusual solution to earning income would be speculating on a token and hoping that it goes up in price and selling, right? An unusual solution would be spending money that I don't have to buy things instead of earning income. An unusual solution would be putting my money into a 401k plan that I have no idea how it works and no idea that I can't get money out of it, no way to access it, instead of just learning about money, right? We want to get rid of unusual solutions. Okay. So the first step is knowledge. And then the second step is making the decision that I'm not going to do unusual things with my finances. I'm going to do things that work. I'm going to do things that are proven. And I'm always going to check before I make a decision. Is there proof that this works? Who else uses this? Where's the track record? What's the history on this? Can I actually see the data? And if I can't, I don't get involved. And that gets rid of most of the obstacles right there. Okay. Now I'm not going to say it gets rid of all of them. There still will be ones that come up, right? You get wealthy, you become a target. Somebody decides they want to sue you to try and get money. That's an obstacle. Sure, you did something to cause it. There's not like a thing you can do less of. Like if you just became a target for people because they want your money, right? So you're still going to have things come up, but they're going to be a lot less. And then you're also going to have a higher responsibility level because of this lifestyle and behavior of, okay, I take responsibility for my obstacles. I don't get involved in unusual things. I spend time learning about money. I don't do things that I don't understand. I don't look for shortcuts. And I do things that are proven. And if I'm doing all of that, when the obstacles do come up, I'm going to be able to solve them easier because I'm stronger. I've got more character. You see what I mean? So guys, I want to open this up for a couple more questions before we wrap up on the topic of obstacles. Again, if you have not gotten a copy of my book, make sure you reach out to Mike in the comments. You can also go to jerryfetta.com/B2F. Let's check out some questions here. And again, if you're on Zoom, drop them in the chat. I would love to go live with you. If you are dealing with an obstacle right now and you'd like my help on how to overcome it, I'm happy to do that as well. Just drop that question in the chat. We'll go live and we'll talk about it together. Okay, Andrew says, okay, so it's stuck till I leave it there. I've halted my contributions. I'll look into the open brokerage window on Fidelity. That's coincidental that he actually has Fidelity to see what else I can invest into. Thanks. Awesome. Yeah, and I think Fidelity does have that open brokerage window, Andrew. Let's see here. Mike suggests avoiding custodian fees. That is another big part. Yeah, avoiding fees. Good. Let's see if we have any questions on Zoom here. I don't see any new ones so far. Again, drop them in the chat if you have any. Good. I don't see any new ones. Awesome. So guys, again, we'll probably wrap up in a minute here. If you're watching, if you're dealing with an obstacle now, take responsibility for having caused it. Get the knowledge. The knowledge is the reason why it happened in the first place. Doesn't matter what the obstacle was. Know the difference between, something that's predictable versus something that's not. Something that's predictable should never be an obstacle. Like inflation should not be an obstacle, but you should know that. You should know about it and be doing something about it, right? So make sure you know the difference between that and being predictable. And the biggest thing I want to part with is I mentioned at the beginning is making this a game, guys. Like finances doesn't have to be this boring, serious, arduous, difficult, painful thing. It should be fun. Like making money should be fun. Saving money in stores of value should be fun. Investing should be fun. You should be enjoying this, right? Learning about how money works should be fun because it's a game you can win at. And if you're ever in a position where you're like, this isn't fun and it doesn't feel like I can win, it's because you're not playing in a winnable way, right? And that goes again back to the knowledge and the obstacles. And then above all things, like always be increasing the knowledge. Always, 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 always. That is the route to less obstacles. That's the route to financial freedom. Even if you lose it all, if you have the knowledge, guys, you can recreate it. That's what makes this different than a financial advisor. That's what makes this different than buying crypto. This is something that if you lost it all, which you probably won't, because this is the plan that doesn't lose you're not doing speculative things. You're doing things that are real, right? But if you did lose it all, because you have this, you could go rebuild it. Right. The problem with the Wall Street advisor is if that guy loses all of my money, I don't know what he did. I can't go recreate it. I would have to go right back to him and say, hey, don't lose it again next time. And that's what people do. They just go from one guy to the next guy saying, hey, this guy lost my money. Hopefully you don't. And then he does, and they go to the next one. Right. You want to avoid that. And then same thing with the crypto. Like not only if you lose it, can you not recreate it? The flip side is true. If you gain it, you can't recreate it. It's like a lottery ticket. Like you can't successfully, like the chance of winning the lottery is already slim to none. The chance of you winning the lottery and then using your lottery ticket to buy more lottery tickets to win even more lottery is even more slim. Right. And the stats on this, I was talking to my team this week, the stats on lottery winners, 70% of them go broke within 8 years. Right. And that's people that didn't earn the income. Lottery, literally, I bought a thing and it paid me a ton of money. And those people have a little degree of caution because they know they don't know how to get more of it. That's why it lasts 8 years. Like, it's like, oh, that's kind of impressive that they don't go broke faster because they know that that's all they have. They already know how hard it is to win the lottery. You look at professional athletes. This stat blew my mind. Professional athletes, 78% of them go broke within 3 years. Okay, what's the difference there? The difference is those people are earning it. For a period of time, they had control over earning it. And so they spend like they're going to get more because they are going to get more as long as they keep playing. But as soon as they stop playing, they've halted the successful action of creating that income, yet they still have all the overhead and all the expenses and all the lifestyle. Right? That's why they go broke faster, even though they legitimately earned it. The lottery winner, they know they're not going to get more. There's not another game. There's not another lottery they're going to win. So again, this is like knowledge, guys. Like if you take either of those people, they should both be independently wealthy for the rest of their lives. Their kids and grandkids should be as well. The difference is they don't know. And because they don't know, one of them goes broke in 3 years. The other one goes broke in less than 8. Okay. So I want to wrap up on that note, guys. If you need anything, reach out to my team. You can comment. If you're watching the replay on YouTube, if you leave a comment, we will comment back. We'll connect up with you. You can do a free coaching call. Again, if you have not gotten a copy of my book, Blueprint to Financial Freedom, do so now. Connect with Mike Kerrigan on my team. You can also go to jerryfetta.com/B2F. Otherwise, we will be back again next week. If you're a client of mine, if you're in the area, I am having our second Saturday event at my house tomorrow night. That'll also be combined with my 30th birthday party. So I'd love to see you there if you can make it. Otherwise, guys, I'll see you guys next Friday. Have a great weekend.